Hello, welcome guys, welcome to Forex Financial Fighters. In this video I want to introduce to you new market maker system, the system which is 100% non-repaint. You see here we have VIX 10 on H4. This is how it looks. We also have it on a VIX 25. This is how it looks. Also on VIX 75 1S. This is how it looks. And also we have a VIX 100. This is how it looks on H4. Before we proceed with the system, I would like to explain how to calculate the time frame variations. Three market phases structure. You see we have a MM bullish cycle, the second we have MM ranging cycle, and the third we have a MM bearish cycle. I would like to explain where MM ranging cycle occur. The MM ranging cycle mostly occur on this previous high, the previous low of the week or of the day. You see here, yes, a peak formation high. We also have a peak formation low here. This is a basic market maker cycle. And then at these zones this is the zone where which ranging cycle can occur. We should be aware of that. Should be aware of this ranging cycle when we are trading. Can also appear in here, everywhere on the zones, and we should be wise to be aware of this ranging cycle. Even here can occur this way, can happen in many different ways, but the important things is to calculate the time frame. Okay, it can also appear even on a bearish cycle. It doesn't matter where you are on the cycle. What matters is how the price react on the previous low and the previous high of the week or of the day. On this bearish cycle can occur here, and then as well it can occur here. Can happen every zone where you expect the market to break even, and then the dealer can hold the price on those zones. You see guys, this is how it happens. It may does this correct of nature. Okay, let me clear this out and see and show you some very simple example. All right, supposedly you have your day one, you have your buy into of, you have your day one, you have buy signal here, and then you expect the dealer to break this apex. Some they call it neckline, I call it apex. You have your buy signal here, and then the price goes up, and then you have your day one, and then pulls back, and then you mark your previous high, yeah? And then you expect the dealer to go to day two, of course, right? But suddenly the dealer hold the price on the previous high of the week or of the day, and then he correct back, and then he stop you out, and then you start to get confused, and you are not sure where you are going now, because you are expecting the dealer to break the high, but he corrected it. So in this example, if this if this is H4, you should know that when the dealer hold the price here at this high and issue a pattern on H1 like this, let me do this. Okay, you have your day one of rise, intraday reversal, and then by the way you have your day one coming off the second leg of H4. Okay, first leg it was here, sort of, right? Then you have your day one. This is the previous high of the day, and then you wait for a pattern, and then the dealer first puts back, and then he issue a second leg, and then he correct, puts back, and then he rise, and then you see the dealer hold the price at this zone, and then fail to break the wave to break even. What do you do when price does this? Do you hold and say, oh, it will just come back, and expect this? Guess what? The dealer, it has issued a pattern, right? And what do you do? And then you, let's see, this it was your day one, right? This is what was your day one. Then this is H4, right? And in H1 you have W formation, and the dealer goes up but fail to break it and issue a pattern. You close your buy position on a small position, and then you take it other way, and then you take your profit. You issue a pattern here, and then you get you take your sell, and then you goes like this, and then it does this, and then you get out. And then the dealer may pulls back and then fail to cut the high and then correct like that, and complete day two. Same thing, and then you complete the day two coming off the extended stop hunt, and then you mark the highs again. Don't forget always to mark the high, and then you will have your intraday reversal here. Then this is your previous high, yesterday's high, and then the dealer come down and stop hunt there, and then you expect the market to go to day three, right? You expect to go to day three, and then you end the cycle. So it is very wise to notice how price act on these highs. If the dealer he may close, he does this again, you close a small profit of buy position and tick sell, and then expect to take profit on the previous low. He comes down, you break the apex here, you get out. You wait for a pattern to continue going up, because you know the directional bias is going up. And then he corrected the nature, and then he cleared the stops of those who took buy here, and then induced sellers, new sellers, and then grab the pending of those who are here, hit the stops of those who buy it, the pending of sellers here, and then they grab it and then correct it, and then complete the day three, just like that. This is where the range cycle occurs. Okay, let's go to the next. Let me clear this out. And then now let's go to explain the bearish cycle. Okay, now we are on a bearish cycle, time frames, calculation, psychology. You see, the bigger picture is very important always. You cannot trade with just one time frame. You have to combine these time frames. I will recommend you to use H4 as a bigger picture, or H1 as daily chart as a bigger picture, and H4 as a bigger picture. In this example, if this is your H4 view, this cycle, if this MM cycle is your H4 view, then you'll know what you'll do on the H1 cycle. We know that, look, we know that W on H4 is equals to W, M, and W on the H4, right? This is how we calculate patterns. We know that a midweek reversal pattern may come with 3 levels of rise or 3 days of rise, but most of the time it can move with in one day it will issue at 3 levels of rise. A midweek reversal is a cycle that happens for 1 or 1.5 days. Okay, let me clear this out. In this example, you see we have a second leg on H4. Second leg on H4, it is equals to W on H1, and the 3 levels of rise. We have 1, and then we have 2, and then we have 3, yeah? And then end the week. And then what do you do next? Wait for pullback. If you know that the dealer is gonna continue going down at this point, let's say on daily you have just 1 level of drop, and then on H4 you're gonna have pullback, and then you can take this apex formation, but you should not expect it to break the previous high, because you get a map. Let's suppose daily, on a day you should go to wave. Let's suppose it was wave 2, day 2. Maybe you have your day 1, yeah, 1. Not day 1, man. You have your 1 month of rise, and then this you have 2 months of rise. Then you expect the dealer to rise for the last month, and then at this point you have, this is 2 in this example, this is 2, and then we expect the view to be this way on H4, because what, we're gonna have pullback. And you can take this for intraday. You can, this is H4 example. On H is a V, right? It's H4. On H1 you're gonna have W formation. And it's good to take it and notice, and knowing that it may not break the high and goes like this. No, because we have a directional bias on a daily chart. We don't expect it to go like that. We expect it to, we're gonna have our pattern here. Once the pattern is break the apex on H1 and break even, we get out. And then after, we're gonna wait for a pattern on H1, M pattern, and then we're gonna take this continuation, and then on H4 it's gonna look this way. We're gonna have a bearish candle, price action closed on H4, and we're gonna have second leg on H1 closed candle, and then we're gonna take the continuation of the weekly cycle in line with the daily cycle levels. And then we know that we're gonna have a one week of drop, which is equals to 3 days of drop on H1. Right? You will have a 1 day of drop, and then 2, have 3, and then you're gonna have your intraday. I mean, you're gonna have pullback after the apex is broken, and then this pullback it will be a midweek reversal. You're gonna have an M here. You're gonna take this midweek reversal, you break the apex a little or break even, you out, knowing that the next week it will continue the same. And then you're gonna have your reset M pattern here. You're gonna wait, and you're gonna have 3 more days of drop. At this point, you have, it's not vincible on a day. You may have this could be week 1, week 2. Then on week 2 you will have 1, 2, 3 levels of drop, and then you're gonna wait for midweek reversal pattern, and then you got add your W here, take it, then correct, you break the apex, break even, you have your 3 levels on M15, get out, and then you know that alright, there is a last level which is must go down. And then he's gonna, this midweek reversal it will be a pullback on a day. It can take 2 days or 3 days. And this midweek reversal, it can take just 1 day, and then take 2 days to create the peak. And then you're gonna have your second leg here, and you're gonna have 1, 2, 3 days of drop. You see, 1, and then you got a 2, 3 days, and then this it will be the last level of drop, and then this it will look like this. And then the delay is, for swing signal, if you're trading swing, you know that if you are here on a day, you have your signal here, your sell entry, and you're gonna hold it until it break even. It will take some 3 weeks of drop. You're gonna see 1, 2, 3 weeks of drop. This is it. It's 1, 2, 3 weeks of drop. See, even here there was 3 weeks of drop. 1, 2, 3 weeks. Even here it was 3 weeks of drop. You see, to calculate the time frame is very important, because it gives you a light to know where you are going. Okay, let me clear this out and go to bullish cycle. It's the same way I explained to you. I just have to cover everything for you guys. Okay, now you see, this is bullish time frame calculation psychology. Alright, as I was explaining to you, let me explain this with H4 and H1 so that you may have a clear light to you. We know that, alright, this is a, let's suppose this is H4 cycle. You have your Okay, let's suppose you were here, you have a peak formation high on a H4. You have a dealer break the apex on H4. When you switch to H1, you have a dealer. Okay, in H1 it will look like this. This is the first leg. It will look like this. You have first leg, and then you have apex, and then you have second leg peak. This is how it look. It will look like you will have 1, and then you have 2, and then you have 3. And then this could be level, it will be 1. This will be midweek reversal. Not midweek reversal, this will present mid-month reversal, of course, because what present midweek reversal are this will be, you'll see this on H1, and this will be midweek reversal continuation pattern. And then inside the 1 week of rise, you will find 3 days of rise on H1, and then M pattern, and then you're gonna find M, and then a W to continue, and then you have your 1, 2, 3 again, just like this, and then 3, and then you have M. See, you have your M, your apex M formation, you have a second leg M formation here. This way you have 22 trade on H1. You have mid-month reversal. You expect all the weeks to correct. Since you are on level 3, you have 3 weeks of drop. Of course, you have 1 week, 2, then 3 weeks of drop, and then okay, you're gonna also have 1 week of drop as a reversal, and then you're gonna have, this was mid-month reversal, and you're gonna have pullback on a month reversal, and then this pullback will present an M formation here. You don't take this pullback without M formation here. If this is a daily pullback on its daily chart, you're gonna wait for M here to come, W formation, and then you're gonna have your entry here, and then your TP should be on the neck, previous low, and then the dealer is corrected and then pulls back, and if he has to continue here, you will issue in pattern here, and then drop. If it means to be a reset this zone, the dealer will come down and issue a pattern here and issue a V. This V will present W here, and then what comes in your mind, you know that the dealer is about to reset the cycle, and then you're gonna have a 1, 2, 3, and then the dealer is gonna come this way and break the apex, and then you wait after the 3 days of drop, of rise, and then you're gonna wait for a pattern, and then pull back, M pull back, and then you're gonna have W for continuation, and then as well this is gonna be, you just have to wait for 1 candle to close, 1 green candle to close, and then that is the price action, and you go up, pulls back, go up, and then the same to this pullback, it will be an M on the next time frame. Of course, you should always calculate this way, and then end the cycle. You see? Okay, guys, by looking at this picture, you can calculate any time frame variation. D is equals to, let's suppose A is equals to M on A on day 1 is equals to M on H4. A on H4 is equal to M on H1. A on H1 is equals to M on 15 minutes. Of course, you get this now. Okay, let me go to the next. Let me go to the lesson, to the system. Oh, before we proceed about the system, this was the range cycle that I was explaining to you, that when you have a cycle going up like this, this is where these ranges can occur. I gave you example that if this is H4, you have a here, just like this in this example, but you're expecting the market to break even, but this came out on the previous high where you expect the market must break, and then it didn't break. It issued a pattern here, here. What do? You have your buy position here, expecting the market to rise, but suddenly the market has declined here. You have M. Chances are you close your buy position on a small position and take this sell, and be aware on how it reacts on the previous low. If it goes like this and issue another pattern, chances are close your small profit and then take it with your with the direction you took in the first time, and expect this. So you must be aware on these zones, guys, always. You can see here it was okay. Let me say it happened this way. This is a range, and then you took it at the first place, and then you expect this to break even, but that didn't happen. What happens is that the dealer, it has failed to break this high and then issue a pattern here. If this is H4 and then dealer happens to hold the price here and issue a pattern, you sell, you close your small profit, your buy position will be here, and then the dealer failed to break the high and issue a pattern here, you take it, and then and look for the timing on how price will act on the previous low. And then if the dealer comes to the previous low and issue a pattern again, in this example, you take it. It does this again, you do the same, you close a small profit, you take it. It does this, you do the same until it moves. Or you can avoid this. You may have your int here, you buy, and then the dealer does this. You can close on a small profit and not buy again, and just wait for the price to correct off nature, and then when you issue a pattern, you take it. It does this again, you do the same, you take it, you fail to break the high, you close a small profit, you don't buy, you wait, he comes back again and clear the stops at the previous low, and then you wait for a new pattern again, you got him. Finally he will move and he will break the high. See, you cannot always do this, but if this intends to happen a lot or so much, just avoid it and simply wait for a breakout. You can just wait for a breakout and retest. Okay, let me clear this out. Let's go to the system now. As I introduced to you a Beat the Market Maker system, which is 100% non-repainting. Let's go to the lessons. Let me clear this. Alright. The pattern. As you can see, guys, here we have a red and blue arrows, and red and a blue boxes. Where there is blue box and a red arrow, where there is a blue box and a blue arrow, presents a peak formation. Let me grab a pen and show you something. You can see here we have a peak formation high, and then we have a level 1, and then we have level 2, we have level 3. We also have peak formation low, and then we have a dealer correct. Then we have our signal here, and then the apex is broken. If you notice that this is a peak formation, and then dealer has pulled, and then it is corrected and pulls back, and then failed to break the high and come back in, but failed to break the apex, and then just ranging this way and clear the high, and then correct. This way you have day 1, you have your signal here, a pull back, you have a signal here, you have a drop, you have day 2, and then you have a pullback, and then you have your signal here, then you got day 3, and then it's the end of the week. Then you have a peak formation low, midweek reversal peak, and then you have a price action down on these pins, or if you doubt here, you can enter here. It's good. Break even the apex, correct, and then you break even, and then you, if you switch on 15 minutes, you see 3 levels, you get out, and then you wait, and then he pulls back and then fail to break the high and issue a pattern here, but didn't break the apex quickly. He drifted the price in the wrong direction, cut the stops which were here, and then correct, and then you have your signal here, and then the dealer correct. You have your day 1, he pulls back, you know the story, and then you expect the dealer to go to day 2, and then he does, and then the same thing. You do not count on these boxes when they are painting after the breakout of the previous low, because this box alone, it has no power. It's not a signal. A signal is this box when combined with arrow. In this example, you have an anchor and a signal arrow here, and then you have your signal confirmed, and then you do not count on this. You know the story, you know that the dealer must obviously it has completed the day 2, break the previous low of day 1, and then he's gonna hit my target, and then he's gonna pull back, and then you know what I'm expecting, the dealer to give me a price action at this zone, a pattern, M pattern. Of course, this pattern can appear here on H1 or appeared so much visible on 15 minutes, and then got it, and then we go to day 3, and then we out, we wait for a midweek reversal peak. It's done. Let me clear this out. You see, when you have a peak formation high, knowing where you are on H4 is very important, because this, you will understand what this peak formation means. Because on H4 you may have this as a second leg, of course. You may have M, then you have drop 1, 2, 3 levels of drop, then it pulls back, and then it reset, and then it drop day 1, day 2, day 3, and then mid-week reversal, and then it does a continuation peak, and then it rise 1, and then 2. Once the signal once the price close below the market maker's moving average, you sell. You can sell before the arrow appears, and then you have your day 1, you wait. The blue arrow, they present the stop hand always. For example, if you are on a downtrend, the blue arrows present a stop hand to you. You don't buy against the trend. You sell. You buy in line with the trend or sell in line with the trend. This is apex formation signal. You can see for yourself, this is it's a non-repenting system. Okay, let's go to the next. Let's go to M15-minute cycle. You see, we have a signal here from here, and then we have day 1 off drop from this signal, and then we have pullback, and then we didn't have a stop hand signal down here, and then also we want to have a continuation signal, because there was no, the signal of yesterday is still the best. We can see this stop hand signal on a 15 minutes chart, because there is visible, and in mind we know that this is a stop hand signal. Let's go to 15 minutes and finish this. You see here we have a little noise of signal, but when you know where you are going, you don't have to be confused, but to be clear in your mind, you know that this is day 1. It has 3 levels of drop, 1, 2, 3, and then pulls back, intraday reversal, anchor, and then second leg, and then drop, then drop, then drop. If you missed the best signal here, you just have to wait for a pullback, and then price close below the average, and then you got it. Let me grab let me clear this and grab a yellow pen. You see, your entry should be here, below a, let me clean this and take black pen. You have your signal below, closed below the MM moving average. You have your sell entry here. Then if you miss this, chances are just wait for a one-off drop and then pull back, and then you wait for price action, then you take it, you take another sell here. This way I got it this here. Okay, let me clear out, go to the next flashcard. Alright, this is VIX25. You can see for yourself here. We have a Grap. You can see we have a day 1, we have day 2, we have day 3, and then after day 3 we have our anchor here, then followed with signal confirmation, then the price correct. We know the story. He pulls back, we expect the dealer to rise again. That's the business. And then you count, you know that okay, the dealer is continuing in line with a bigger picture. Let me show you. We know that on H4 we expect the dealer to break even. We expect the dealer to rise this way, right? Okay, let me clear this out. Since we expect the dealer to do that, we expect 3 levels of rise. You see, we have day 1, we have a signal confirmed, peak formation low. We have day 1 here, and then we have our entry here. Of course, you have pullback, and then you have a price close above the market maker average, and then you'll have your day 2 of rise, and then you expect him to rise and hit our target, and then we expect the dealer to pull back, and then we expect him to issue us a pattern here, and then we go to day 3, and then end the week and wait for the midweek reversal. Okay guys, this is the new system that I was introducing to you. Okay, let's go to 15 minutes. You see, we have a signal here, but we don't have a stop hand signal here. We don't have a stop hand arrow signal. It means we're gonna have this on 15 minutes. So it is wise, knowing that when you are here, you are going up. It is wise to switch on both times to calculate. Since you understand that, okay, we have a W and a pullback, and then we expect the market to rise on day 2. We know that this second leg we have W on M15. We also have a W of intraday reversal, and then here we should also have a W on a of continuation. We can see the W in H1, but it's not clear like it can be clear on M15. Okay guys, let me clear this out and go to M15 minutes and show you. Alright, search for. Okay, you see guys, what I was talking about is this. Since we have on H1 we have this W, and then we have this A, and then we have this. But here on M15 it's different. We have too many noises of signals, but what's giving us an edge is the peak. The peak formation is very important. You can avoid all this noise knowing that I'm on a second leg of H4, and then we have W here. We have our day 1 of rise. We have our 1, 2, 3 levels of rise, and then we have our intraday reversal M. Then he has break the apex, and then he issue a first take and the second leg, and then he close above the market maker moving average, and then got him. Our stops here, he moved. See guys, this is how the system works. If you don't know about the market maker, the system is the place to escape on. This way you can able to be profitable trader. You can be consistent just by simple obeying the rules. Okay guys, thanks you for watching. We'll see you next time on the next video. Wish you successful trading.